Market Outlook, Calendar Week 9. The past week was dominated by the US Federal Reserve. The Fed cut its policy rate by 25 basis points, fully in line with market expectations. More important than the move itself was the message: further cuts in October and December remain possible, explicitly data-dependent. Monetary policy is thus edging cautiously toward easing without abandoning its inflation compass. In parallel, the balance sheet reduction continues. Over the long term, that is not a tailwind for risk assets as system liquidity declines. In the short term, however, we expect only limited immediate effects as long as the pace of reduction remains predictable. Overall, week 38 produced a transitional picture: volatility around the press conference, followed by a moderate return to normal with respect for the upcoming data. This environment was reflected in Quantum's signal control. In week 38, we operated with a signal quota of roughly 50%, deliberately activating only every second. Potentially tradable opportunity. That restraint was not a loss of speed, but risk management. The result, the weekly loss, was limited to 1.37%. Not a reason for euphoria, but evidence that disciplined position sizing, clear triggers, and robust protective mechanisms make the difference in a data-driven market. When macro leads micro, capital protection is the first duty. Performance arises from confirmed setups, not from activism. Looking ahead to week 39, data windows move to the forefront and can create impulses in both directions. The week opens with S&P Global's flash PMIs as early indicators of activity, order flow, and price pressure. They often set the tone for risk appetite and the willingness to rotate into higher beta segments. From Europe comes the IFO sentiment print, relevant for cyclical expectations in the euro area. Midweek and into the close, the US takes center stage. The third GDP estimate, durable goods orders, existing home sales, and the personal income and outlays package, with core PCE in focus. The final University of Michigan sentiment rounds things out. Core PCE in particular is often the lever through which the USD and real yields are repriced. For digital assets, this points to likely event-driven volatility, while directional decisions tend to emerge only when several data points support a consistent narrative. Market indicators underscore this caution. Bitcoin dominance hovers around 56%, with a band of roughly 54.8 to 56.2% last week. That argues for a preference toward core beta and still solid liquidity. Rotation into altcoins remains selective and mostly tactical. The Fear and Greed Index stands at 51 after 44 the week before, neutral to slightly positive, yet clearly away from greed-driven extremes. In this constellation, timing of data and the reaction in real yields set the momentum. Sustainable moves derive less from headlines and more from confirmation via price, volume, and market breadth. Operationally, we begin the week with a 50% signal quota. We activate only those setups that confirm cleanly, respect market depth, and offer a coherent risk-reward. Around release windows, especially PMIs and core PCE, we reduce purely automated order placement and prioritize signals with short post-release confirmation. Position sizes remain moderate, stop logic adaptive, and take profits are aligned with realized volatility in each trading phase. In the asset mix, we keep BTC and ETH as liquidity anchors. Altcoins are traded selectively where liquidity is reliable and no immediate token unlock risks loom. Should week 39's data produce a clearer, broad-based risk picture, say resilient activity with moderate price pressure in the US and stabilizing tones from Europe, we will consider a cautious increase in the quota. Any step would be gradual, anchored in measurable criteria and reversible at any time. Conversely, the system will automatically scale down if volatility turns non-directional, spreads widen, or market breadth visibly deteriorates. This framing serves solely to describe our signal-based approach and does not constitute investment advice, a recommendation to buy or sell, or any promise of returns or prices. If the week delivers, we will scale up prudently. If it fizzles, we remain selective. That is how we balance opportunity and protection, and in a macro-driven environment, that balance is the real achievement. Quantum data analytics. Analytical, strategic, innovative.